Yeah, morning traders. A huge week in terms of the landmines that we have to effectively navigate our positions and exposures across, and our ability to manage that risk and achieve correct position sizing, and whether we hold those exposures over that event is what will keep us in the game essentially. So what are we watching? I think on one hand we will potentially going to hear the suitor for First Republic and the session ahead. I think the market seems to have given this one a bit of a wide berth and think this one's fairly well ring fenced, and the positives are ultimately going to be fine here. But we're watching the banks and see how that sort of comes through. Janet Yellen should announce the X date for the debt ceiling. That's the date when they have to effectively cut back on essential services. But we should hear that this week, and that then becomes firmly on the market's radars going forward. The Fed meeting will be coming out. Obviously, the market's firmly nailed on a 25 basis point hike, and whether they have this kind of lazy tightening bias is going to be what we're watching. Do they move less away from sort of like financial stability risks and focus more prominently back on inflation is going to be what we're watching. We've got the EU CPI numbers coming out. The market's expecting headline at 7% and core at 5.6%. And that's going to shape expectations as we go into that ECB meeting later, just a couple of days after that point. We've got a Reserve Bank meeting tomorrow. The market's giving this one very little, but I think there's probably some modest hawkish risk to the Australian dollar there. We've got payrolls later in the week. The market's looking for 180,000, an unemployment rate of 3.6%, average hourly earnings, which I think are going to be absolutely key there at 4.2%. It's important to note that non-farm payrolls numbers have beaten in 12 of the last 12 times, and the US dollar has rallied about 8 of those times in 5 minutes after. We get some of the other sort of data points, jolts. We've got ISM manufacturing services numbers. We've got data out of Canada in terms of the employment numbers as well. And we've got ECB bank lending numbers. Now, in terms of rates, we can see that the market's pricing in 23 basis points of tights for the Fed meeting. Interestingly, by the end of the year, we've got 33 basis points of cuts. So far, going between June and December of next year, we've got 207 basis points of cuts being priced in. We've got 27 basis points of tights being priced for the ECB meeting. We've got a terminal of 362, which implies 70 odd basis points of tights. RBA, as I say, 2 basis points being priced, and we've got a terminal of 368, implying about 11 basis points. And Bank of England, we've got 28 basis points being priced in for the Bank of England meeting on the 11th. So a big week ahead, and trade it with Pepperstone.